and good morning, guys. It's Trader Tinashe, and today I am going to analyze gold with you and catch ourselves some good entries. Right as the market opens, today is a Monday, it's the 23rd, and we just want to make sure that we have gold on the chokehold before the week starts and carry it throughout the week and exit it at the perfect point so that we don't miss a single peep during the week. So in this video, I'm going to teach you how to analyze the markets both technically and fundamentally, and I'm also going to teach you how to spot chart patterns, how to create your equidistant trend lines, and how to find the perfect trade and enter, set your stop loss and set your TP as well. So let's not waste any more time. If you are new to the channel, please just make sure you subscribe and support the channel. So the first thing we do, like always, we're on the 4-hour time frame. We mark our highest point, which happens to be here. This is our all-time high. And we mark our lowest point, which is this, but is currently unnecessary. So we are going to work with the all-time high since we are in an uptrend. If we are in a downtrend, we are going to work with the low. So based on this, let me just do a quick recap on what a trend is. A trend, there is an uptrend and a downtrend. This is an uptrend and this is a downtrend. So in an uptrend, the market is creating lows, higher highs, lower highs, higher highs as it goes up, and higher lows as it goes up. So the market will be creating highs as it goes up, which are higher than the previous high, and lows which are higher than the previous low as well. Then as the market goes down, it's doing the same thing. It's creating lower lows and lower highs as it goes down. So your job as a trader is to find the exact spot where these markets are creating the highs and try to enter the next high, try to take the next low and exit at the next high, or try to enter the next high and exit at the next low if you are in a sell. So now we know what a trend is. We want to find which trend our market is currently in. Okay, so we can tell that the markets, we take our parallel channel. Okay, if you are using MetaTrader, the parallel channel is called the equidistant channel or an equidistant trend line because it has parallel lines. These lines are parallel. The first one at the bottom and the one at the top, they are parallel, and this between is the 50% of the parallel lines. Okay, so in MetaTrader it won't have the 50%, but I'm sure if you're using it on a computer you can edit it. But if you're using TradingView, I'm using TradingView, you just go to your left tab here. Just below the cursors there is this column that drops down. Then you move down and select parallel channel, which will be at the bottom here. So after you select it, we want to look for the trend the market is in. We want to do our top-down analysis starting on the 4-hour time frame. So we'll touch the first high, which happened to be our highest high. Let the market go down. So how we draw our trend, our equidistant trend line is, we just have to touch the first part and the second part. After touching the second part, we just let the channel keep going. You don't stop it, you just let it keep going. So that's where we place it. So the key levels are just the first and the second. Then the key level at the bottom is the lowest point between the first and the second, which happens to be right here. So that's where we place it. So you can see that if we were here, we would have known the exact time to enter our trade because we would have waited for the market to come here. And if you scroll down on my videos, you could have seen where we gave this trend. And then the market came up, then broke our channel, then went up, retested our channel, then is now going up. Okay, it reached this liquidity zone right here, and then it's now retesting going down. So primarily we are in an uptrend. Okay. So now we want to look for the perfect entry on this uptrend. So what the next move we do is move on to the 1 hour time frame or the 2 hour time frame. Okay. So what I usually like to do is remove the noise in the markets. So how do we remove the noise in the markets? We move and start using the line chart. Okay. We move and select the line chart. Okay, so this right here is our line chart. Okay, so we are no longer worried about this point right here because we already dealt with it with our previous channel. So we are now interested in what the market had to offer from this point to our current point. So we place our equidistant channel again. We just have to touch the first two, which happens to be this, and let the market go on. Okay. So after touching the first and the second, we let the market go on. And then we touch between the first and the second, but at the top, which happens to be here. So automatically you can now tell how the market moved. The market came, respected our zone, respected our channel, came down, respected our channel again, came up, respected our channel again, came down, and right now is currently respecting the channel again. So we're expecting it to go ahead and touch the next trend line, and then break out, retest, then touch our all-time high and even break it and continue going. You know that gold currently is a very strong asset to hold, because gold is a resource that depletes, so people want to have as much of countries, companies, people, shareholders, and everyone wants to have a large amount of this gold deposits before it's depleted. Unlike other things like stocks and currencies, gold has a strong backup because this is not a renewable resource. Okay. So we now know that the market should touch our first high, our all-time high right there, but you don't have the perfect entry. So right now we can just move back to the candles. Then I want to teach you guys today something about chart patterns. So if you just go on Google and type in chart patterns PDF, just look there and find a perfect PDF so that you can look at it and understand how the market moves. You understand which chart pattern helps, which chart pattern doesn't help. But basically what you should know is that you should know all the chart patterns that are available on the market. So with that, the main chart patterns that often happen are the double bottom. Let me just try to illustrate it here. This is the double bottom, where it comes down, creates a bottom, goes up, creates a neckline, goes down again, creates a second bottom, then goes up. Then we have the heads and shoulders, but if we're looking at it in an uptrend, it creates a reverse heads and shoulders, which will look something like this. Then we have the triple bottom, which will look something like this as it goes up. Then for sales, or if we're looking to sell the market, if we're looking for bearish trades, it just has to create these patterns as well, but they are just reversed. So the double bottom becomes a double top. The inverse heads and shoulders becomes our proper heads and shoulders, and something that you can easily tell. They're easier to tell if the market is going down. Okay, so something you should know about chart patterns. Chart patterns are made every day. When the market is moving, every day a chart pattern is made. It's either it's creating a reversal chart pattern. Reversal chart patterns are created at the top or at the bottom of channels, or is creating continuous chart patterns. Continuous chart patterns are the flags, the tenants, and the wedges. So Basing on that, you now know how the chart patterns work. So if you are looking for an entry right at the bottom of our channel, we are looking for a reversal chart pattern, which happens to be a double bottom like this one. You can see that there's a double bottom and the market went up to touch the first point. If you are looking for a continuous pattern as the market was going up, you are looking for falling wedges. As you can see, that was a wedge. The market danced around, then continued to fall down. Then, if you're looking for sales, this is a triple top right here. If you just look at the PDS, they'll give you a better illustration and demonstration on how these patterns work. This was a double top, you can see. So whenever the market is moving, the market is creating patterns. So currently we are creating a double bottom. You can see that the first bottom was made, and now we are creating the second bottom edge. What happens next is the market will come, break our neckline, continue, touch this 50% zone, which is a high area of resistance, break it, continue going up, and possibly break this channel again, then we go up again and touch our upper trend line. So that's how the market should move. Now we want to move on to our next chapter. Okay, so we talked about chart patterns, we talked about continuous and reversal chart patterns, how the market is expected to obey and how the market is expected to move. So we now know that the market has to go on and touch the high, but we don't have our perfect entry. So what we do is we move on to a smaller time frame again. In this case, we're going to move on to the 1 hour time frame. Then you take your trend line, you look for two good highs. This high can work and this high can work. Then you let the trend line keep going. Okay, so it will come out something more or less like this. Okay, so this trend line was broken. This was a breakout, and then it broke, but when it broke, you can see that it created a gap in the market. This is a gap, so this gap has to be closed. So that's a confirmation that the market is going up. Then another confirmation is that this is a breakout candle. The gap was a breakout, so the market should respect this breakout. Currently it's retesting, then it will go back up and then touch a high. So if you move on to a bigger time frame, the 2 hour time frame maybe, you will see that the market is on a retest. It's waiting to break this trend line and continue going up. So if we're looking at the market like this, we now have a clear picture of what the market might do, and we have a few confirmations to indicate that this is a perfect signal. Our first confirmation was the channel. It touched the third touch of our channel, and guys, always remember that the third touch is very crucial on how the market moves. It's respected three times out of every 9 times. So if the market is at the third touch, always remember that you are going to buy. If the third touch was at the top here, you can tell that this was going to be our first point, this was going to be our second point, and the market would go, this would be our third touch. Though it went up, created a funny movement, but if you move on to the 4 hour time frame, you see that this was a perfect touch, then the market sell. So in this situation, this happens to be our third touch, our market should buy. So like always, we put our trend channel. We found out that we have our first confirmation, which is the third touch inside our channel. Then our second confirmation was the double bottom, which was created by the market, which is being created by the market, this bottom right here, which we are currently holding on to. Then our third confirmation was the gap, the market gap, which when the market opened, it left this gap, which has to be closed. Then our is it third or fourth? Our fourth confirmation would be the breakout and the retest. We are currently holding on to this, the retest. Then with that, we can now use our rectangles to mark our supports. You can see that this is a strong area of support right here where the market is at. It's a strong area of support. The market is currently here. You can see that this is a strong area of support if we're working with this low right here. So it's at an area of support that's That's another confirmation that's just giving you more confidence to buy the trade. Okay, so now what we look for is an entry. So we take our projection, which happens to be here. We are looking for a long trade. We put our buy here where the market is at, and our take profit would be where it reaches the market, when it reaches the top of the trend line. But a trend line is never respected 4 times, so there is a higher possibility that it will touch our all-time high and even break it, but we'll just hold till the all-time high is reached. Then stop loss, we place it right below our first low, which happens to be here, our previous low, which happens to be here. So our stop loss will be somewhere here. So that is a very good trade, and you would have made good money here. So right now we would enter our buy trade here, and then hold it. We would enter our buy trade here, right? Hold it, wait for it to break this trend line, to break this neckline for the double bottom, then it will continue going up. It will maybe respect this 50% zone, maybe dance around, create a continuous pattern like the flag or the wedges. If it creates a flag, there's another confirmation that the market will continue going up. Then it will go up, touch this point. Then after touching this point, it has no option than to break out and continue going up, creating a new all-time high. So we're expecting gold to create a new all-time high. Between the next 2 weeks, it should create a new all-time high. And if there is no disturbances from the fundamental side, then gold should continue going up. Then on technical analysis, that would be how you catch your trade. Then if there is news regarding the euro or the USD, that is a major factor on how the market, will react to it. So always remember that the market should respect our technical analysis before it respects our fundamental analysis. So if news comes out today, example, if NFP comes, or if CPI or PPI comes, and then it's very powerful, or unemployment changes, or other news events like wars, etc., this means that the markets, we have to respect our technical analysis first. That's when you see the market creating a big candle, and then a weak, which turns out to be a weak. Then it will look like a big candle, but it will also look like a stop hunt. But if you entered your trade correctly, if you put your take profit here on the first channel breakout, on the first channel top, and your stop loss perfectly, your trade will execute nicely and then reach your TP, reach your stop. If it reaches your TP, you make money. If it reaches your stop loss, it will make you loss. But you only lose a portion of what you're supposed to gain. So you can wait for the news events, but every news event that's going to come this week based on this technical analysis will be a positive result on euro and a negative result on USD, meaning a buy for gold. So guys, that's all on fundamental and technical analysis of the gold trade. So if you're new, please make sure you subscribe. Welcome to the channel. Don't forget to comment, don't forget to like, and my phone number will be in the description. You can just message me if you need help on anything. I'll be online. And I think that's all for today. We have analyzed gold, and we'll also analyze more trades today. So just make sure that you are in the groups. Just make sure that you stay online on my YouTube channel. You go through the videos, my recent updates, so that you can see the new videos that I would have posted on the new trades you're going to enter today. So thank you guys. Have a wonderful day. See you at Take Profit.